What's up everybody? Welcome to the Stocks channel. My name is Corey and we continue to see this bull market impulsing higher, and we're very close to brand new all-time highs. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today we saw SPY going up 0.77% as we continue to see this very impulsive bull rally. We opened yet another gap today, and it was another gap and go, meaning we did not close the gap below. So we now have another gap to fill right around 447.7. So you can clearly tell that this is a very impulsive bull rally, and this is not a bull market you want to try to short in. Are we due for a pullback? Possibly, but that doesn't mean that it's just going to be an easy short position, because the market could still just go sideways and form a bull flag from here. So there is a ton of gaps below, with now 3 gaps being open. But remember, the gap at 436 is not likely going to get filled until the next stock market correction, because we do have weekly support above that level. We're very close to going back in the full bull trend on the daily chart as soon as that 20 simple moving average crosses back above the 50 EMA. And remember, that will be a lagging indicator because the price action has already told us that we're extremely bullish. So remember, price action is king, and we're letting the price action do all the talking. And that's why we've continued to be on the right side of this market. We got the price action back above the 50 EMA for the 4th day in a row. And even if we get a pullback from here, there is a ton of support below for the bulls to buy off of to drive SPY back to brand new all-time highs. So we're back at that very critical resistance level right around 450. And if SPY is going to turn around and not form a brand new all-time high, it has to do it around this level. If we continue going any higher to the next resistance level, we're knocking on the door of the previous all-time high, and the bulls are very likely going to try to blast right through that level and break out to 456 and our price targets in the 460s. So watch this strong resistance at 450, because we now have the second day in a row closing above 447. So we're very likely going back into a bull cycle, and there's not much downside remaining with today's bullish price action. So any pullback from here is a buying opportunity in this bull cycle, as we do have plenty of buying opportunities if we do see a pullback at 447, 444, the gap close right around 442.7, and our strong support level at 441. Remember, I don't expect to see SPY going too much lower than about 444 to 442, because we are in such a strong bull market. There's plenty of people who miss this rally that are just dying to buy in. So that cash is going to start coming off of the sidelines, coming back into this market. So don't expect to see some giant pullback before we go any higher. It's more than likely at this point going to be a continuation of a FOMO rally, as we see the bears getting short squeezed and the neutral camp buying in with that cash on the sidelines. Remember, this is the exact condition we talked about from the weekend episode with that bear bull survey and all the cash that we saw on the sidelines. And we're seeing that cash getting deployed into the market at this time. So we are very close to breaking out to those brand new all-time highs. So let the trend be your friend, and remember, we're still in a macro level bull trend. So the path of least resistance is still going to be higher even after this very impulsive rally. Jumping over to the NASDAQ 100 QQQs, we see a very similar story as the S&P 500, but we only have one gap below around 360. So like I said, don't expect that gap down there to get filled, because the weekly support is above that level, and we do see a lot of bullish trending returning to the QQQs. The QQQs got that decisive price action breakout above 373 today. So as you can tell, we now have another daily high from the last daily high that we had on September 24th. So there's no way you can look at that as anything other than a bullish breakout and bullish price action. Each and every day that goes by, it's looking more and more likely like this was just our ABC correction, and now we're going back on the bull, which means we are expecting to see another bull cycle that takes us to brand new all-time highs. So resistance on the QQQs is at 378, 381, and our next brand new all-time high price target at 388. The buying levels are our support levels below at 373 and our 50 EMA at 366. Remember, just like I said on SPY, this is a very impulsive bull rally, and there's a ton of people just dying to buy into this market. So don't expect to see price action breaking back down below that 50 EMA of support. And because that support level is a moving average and it's positively sloping, that critical support level will continue to rise each and every day that the price action stays above that level. So this is a strong bull market with plenty of support to the downside. So this is still a buy the dip market in the macro level bull cycle. Jumping over to the Dow Jones, we were up over 0.5% today, and again we see the Dow Jones looking very impulsive, and we're very close to getting to that next price target at 355. Above 355, look for resistance at the previous all-time high just above 356, and above that we have a brand new all-time high price target right around 360. To the downside, look for support at 351, the gap fill at 349, and our strong support level at 348. I don't expect to see the Dow Jones breaking down below 348, so that will be your strongest support level in the event that we do get down there. We're very close to regaining the full bull trend in the Dow Jones as well, so we see all three indices looking very bullish together. In the Russell 2000, we were up 0.37% today, and it's starting to look like the Russell 2000 could be getting ready for that bullish breakout. Remember, we never did see a closing price above our resistance trend line, which is right around 226, and today we did close just above that trend line. The real breakout level is just below 227, right around 226.5, so we would like to see a decisive breakout above that level, and then we could see the Russell 2000 start running in a very impulsive move like we've seen in the indices. We will have strong resistance around 229, and the next breakout level will be a break above 232. So there's plenty of resistance to the upside, but if the Russell 2000 can break out above these levels, we're very likely going to see a very bullish impulsive rally. Today, you can tell the Russell 2000 did regain the full bull trend, so we now see the very early beginnings of a bull market in the Russell 2000. We got the breakout price action and we got the full bull trend, so any price action close above about 227 to 229 will be a very bullish development. We do have a gap below and a support level right around 222, so watch that level if we do get a pullback, but that should be a very strong support level. If we break back down below 222, we still do have support right around 219, but at this time I don't expect to see the Russell 2000 breaking down unless this is all just a false breakout look. Jumping over to the ARKK ETF, we were up over 2% today, and we did get to that resistance level at 120, and we did close just below that level. We're on the second day in a row closing back above the 50 EMA, so I do think ARKK is looking a lot more bullish at this time. As long as the price action can stay above the 50 EMA, you can go long on ARKK and just set your risk at a close below the 50 EMA. Below that, we still have support at 115 and 113, and we do have a gap right around 113.5. So if we do break back down below the 50 EMA, look for that gap fill as a next potential support level. But overall, all of the moving averages are starting to go back to a positive slope as we see the price action breaking through some critical resistance. So if you see the ARKK ETF impulsing higher and breaking above 120, look for resistance at 123, 126, and 128. On the VIX, we were down over 3.7%, and we continue to see the VIX getting crushed back down towards that support level at 14. Remember, if the VIX is heading down towards 14, we're very likely going to see brand new all-time highs, and you can easily see that condition is currently playing out as the VIX heads lower and we're very close to brand new all-time highs on the S&P 500. If you see the VIX breaking back out above 19, that would be an early warning sign that we're going through another pullback, but right now the VIX looks very weak and very bearish as it heads down into that support level right around 14. So the VIX is telling us that we're going back into a bull cycle, so that does go hand in hand with what we're seeing in the price action and the trend. On Bitcoin, we're currently up over 2.8%, and we're seeing Bitcoin breaking out of a critical level, which is our price target at 63,700. Above that level, we do have price targets at brand new all-time highs at 67,000 and 75,000. Bitcoin's critical support levels are now 55,000 and 51,000, and we do have very strong bullish price action with a very strong full bull trend. So Bitcoin is extremely bullish in both price action and trend, and you never know how high Bitcoin will really go, so just hang on for the wild ride as long as we have the full bull trend. On Amazon stock, we were flat on the day, failing to break and close above that gap close of resistance at 34.52. We see the moving averages are going back into a positive slope, and we're holding above that bullish level at the 50 EMA right around 33.68. As long as the price action stays above 33.11, we are bullish on Amazon, and right now we should be seeing the price action staying above the 50 EMA or our $3,400 support level. So look for support at 3,400 and 33.68, and below that we still have support at our 20 simple moving average right around 33.25. To the upside, we have resistance at 34.52, 3,500, 35.52, and the gap close at 35.80. And if we break out above the gap close, we could start running and retest previous all-time highs up here right around 37.60. On Tesla stock, we were down 0.67% today as we're starting to see Tesla starting to get punished for going way too parabolic and just going up way too far, way too fast. We see Tesla got very close to retesting the previous all-time high closing price at 881, and we're starting to see Tesla getting a pullback. The price action is outside the upper Bollinger Band, and we are just way too parabolic, so there's no reason to believe that Tesla has a lot more upside, and we're more than likely going to see a sell the news event, even if we see a blowout earnings report, because Tesla stock is just pricing in perfection. We have support below at 858 and the gap close at 844, and I do think Tesla is going to close that gap before we see any more upside. Below that gap, we have support at 825, the next gap close at 821, and strong support at 800. We could see Tesla get back down to $800 in a hurry because we did see this sort of blow off top look, which means we could go down just as fast as we went up. So look at those potential support levels if we do start to pull back. Otherwise, we're going to see Tesla continue to go parabolic and blast through 881 and continue to go through a blow off top, which means the selling would come later, but it still does mean we would see sharp selling to the downside because these parabolic moves do not last and we would need to see a cool down in Tesla stock. But overall, it's still a bullish stock with a full bull trend. We just need to see the price action cooling down just a little bit, and we're very likely going to see that soon. On Apple stock, we were up over 1.5% today, and we see Apple still looking very bullish with the second day in a row closing back above the 50 EMA, which was our breakout level above 145. So to the downside, look for support at 145, 143.6, 142, and 139. It's very likely Apple is breaking out and getting ready to run into earnings, so I don't necessarily think Apple is coming back down to support at 145 before it goes any higher. We should have strong resistance around 150, so look at that level as a potential breakout level, because if Apple breaks out above 150, we could start running to the previous all-time high at 157. So watch the breakout at 150, otherwise look for a slight pullback, possibly back to about 147. On the financial sector, we were up about 1% today, and we still see full bull price action with the full bull trend, so the financial sector is still looking very bullish. The industrial sector was up 0.59% today, and we see price action still bullish above all the moving averages, and we're starting to see a lot of bullish momentum building up once again with all the moving averages with a positive slope. The healthcare sector had a very bullish day today, going up 1.31% and closing back above the 20 simple moving average, and we're starting to see the moving averages start favoring the bulls once more. We still need to see the healthcare sector breaking back above the 50 EMA. The energy sector was up 1.13% today, and we still see very bullish price action with a very bullish trend in the energy sector. So jumping back over to the S&P 500, this is definitely still a very strong bull market, and as you can tell, the price action is very impulsive, which tells us we're still on the right side of the trade by being bullish. You don't get the elevator up on the bull side without a very strong bull market, and these gaps below are only telling you how impulsive that SPY really is. So don't look at those gaps as they have to get filled, because very likely we're not going to fill those gaps until we get the next stock market correction. Earnings season is officially here, and that's typically a very optimistic time, but it is important that these companies don't miss on their earnings report. So if we start to see big tech blue chip names start missing on their guidance or missing their earnings, we could see a massive sell-off. But don't just anticipate that that has to happen, because we are still in what I think is a secular bull market, which means we should still see strong earnings and strong guidance from these companies. Obviously, everything is subject to change and we'll still take it day by day. But right now, just know this is a strong bull market and you do want to buy the dip off of support until we see something changing in this market. Also, don't forget that I do have my own trade alert service called Bank Trade Alerts that only trades TQQQs. And I think with the current market conditions, now is the best time to be a bank member. I'm currently running a 50% off promotion code for your first month, so now is the best time to try out Bank Trade Alerts. You can find out all of the details and how to join by clicking on the links in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.